Neelabha saying, then I have difficulties to understand longest time frame via Wyckoff. I can't recognize the stages. You don't need to recognize the stages. I'm not even going to go to charts to explain anything. Stop doing that, alright? There is absolutely no need for you to understand the stages, because I'll tell you why. The moment you go to longer time frame charts, alright, like long swing time frame or maybe investment time frame, something like that, to understand like what is happening on the big picture, it is fractal, right? The markets are fractal, so obviously it behaves differently because objectives are different in different time frames, but it is basically a fractal entity. What do I mean by that? That the structure of the market on higher time frames is same as the structure of the market on shorter time frame, but still Wyckoff cannot work on shorter time frame because motivations are different for traders on shorter time frames. But overall, the structure is similar. Okay. The problem with applying Wyckoff on higher time frames is that it takes a lot of time to confirm what you think is going to happen. So let's say you are expecting a test in C phase. Alright. That test you want it to happen quickly because traditionally you know that test should happen quickly. But it can take a long time, and it is preceded by B phase. B phase is what? Consolidation. So every time there is a rapid move, every time there is a failed auction, every time we go beyond an extreme, what we believe it is a test, and now the move is going to start, and nothing happens. It goes to the other end, fails there, comes back up. What is happening? The B phase is continuing. So where should you look for a trade? Why do I focus on the range trading rules? Why I'm talking about a range and only focusing on taking a trade at the extremes of the range, either top or bottom? Why I'm saying look for absorption of demand at the bottom, and if it does not happen and we get exhausted and if we go back up, then treat it as exhaustion and continuation of consolidation. Why I'm saying that is because it matches with the Wyckoff terminology and the D phase in Wyckoff. The D phase is the absorption of demand or supply. So any move, any big move that is going to happen on a Wyckoff on any chart, if you are doing Wyckoff analysis, is going to start after the D phase. The D phase is that final struggle between buyers and sellers before the big move happens. And since market is fractal in nature, the same logic we are applying on a shorter time frame chart. Why I am looking at yesterday's high and low? Because yesterday's high and low are similar to the B phase high and low in Wyckoff, where the C phase will test beyond any of the extremes and D phase will absorb the opposite activity on the opposite side of the test and will result in a bigger move. Make sense? So you need to understand, the more you try to find those phases on longer time frame chart, the more frustration you will get because they won't work out. And then what will happen? You will get frustrated, you will give up. You come back after 3 months, 4 months, 6 months. Suddenly you see the chart and what do you see? Oh, this looks like a Wyckoff schematic. Then you plot the schematic and it works perfectly fine. The problem is in trying to catch it real time, forget about all the phases A, B, C, D, E, forget about everything, just remember it phase D, that's it. A, B, C and E, you don't need that. E is automatically going to happen once you catch the D phase correctly. Because if D does not work out, what you have still continuation of the B phase. So it is complicated, it is not easy to apply even on longer time frames. It is very easy to observe once it has happened, but real-time application to longer time frame is difficult because it takes hell of a lot of time. Do you have that much of patience? And if you really want to apply it, what you're supposed to do, you have to look at the chart only once in a month. Can you do that? Let's say pick up the last Thursday of the month or last Wednesday for Bank Nifty, last Thursday for Nifty, once the F&O series is over, and you observe the chart once a month. You don't look at the weekly chart, daily chart throughout the month, because only then you will be able to catch some meaningful developments on the chart. So it's not very easy. Don't try it. Don't waste your time. You will only get frustrated. Nothing will come out of it. Study the schematics. Understand the trader behavior in those schematics, and that behavior will work on shorter time frame charts. But again, like if you start plotting ABCDE phases on shorter time frame chart, it won't work. Why it won't work? Because on shorter time frame chart, there are some factors which are not purely supply and demand, like opening and closing. Opening and closing, yeah, obviously their buying or selling increases, activity increases. But why is it increasing? It is increasing because the trading is just starting or going to finish. So it is a time constraint on the traders that they have to finish their business. Or it is the excitement of the market opening where most of the business is done in the morning. So all these factors, they are creating issues. Now add to it news events. Let's say there is an RBI policy. RBI cuts the rate, increases the rate, does something unexpected. You are tracking Infosys and there is a result of Infosys declared overnight. It is bad, it is against the expectation. All these things are going to create volatility, which will make your life hell if you are trying to apply those concepts on shorter time frame chart. But what will work every time? Every time what will work is the D phase. Every time there will be consolidations on shorter time frame charts. Every time there will be the similar activities of trying to test the waters at the extremes, and if you don't get the expected behavior, there is a likelihood of a breakout, and all those things that we constantly talk about is exactly what is going to keep happening on the charts. So Wyckoff phases, they are not there to mark on the charts. They are there to understand, like in different phases, what trader behaviors will be. And once you understand that behavior, and then you go to the charts with trying to spot the behavior, not the phases, things will start working for you. So when I say that Wyckoff probably is the person who had the most impact on the world of technical analysis, is absolutely true. I believe it wholeheartedly. But if you are telling me that you want to plot those phases, it would work. But don't get discouraged. Like, it's very important. You have to study Wyckoff again and again. But to realize this, what I'm just telling you, it might take a little time for it to sink in. And for that, you need to unlearn the way you have learned things beforehand. But trust me, like if you believe what I'm saying, it is only going to help you in the long run.